Well, welcome everyone to Internal Audit Skills Training Without Travel, presented jointly by AuditNet and Woodington Training Solutions. This webinar is part of the AuditNet Training Without Travel series. The subject of today's webinar is Internal Auditing Basics. I'm Jim Kaplan, founder and owner of AuditNet, and I will be moderating the webinar. Joining us is Bill Woodington, principal of Woodington Training Solutions, who will cover Internal Auditing Basics. Let me have Bill introduce himself and give you a brief overview of his background, and then I'll cover the housekeeping items for the webinar. Bill?
Yeah, welcome again, everyone. I know a number of you are returning. Again, today's seminar is a topic out of my new auditor training class. I started my own business last year after 22 years in the audit group at Wells Fargo, the last 18 as head of learning and development for the audit group at Wells Fargo. Now I'm out on my own teaching my own internal auditing and professional development seminars. I'll talk more about that at the end of our webinar today. Just want to welcome all of you. Thanks so much for joining today.
Thank you, Bill. And there's a little bit of information about me and a little bit of information about AuditNet. I'm not going to go over that. You can read that if you paid for today's webinar and you have the slides. Basically, AuditNet is probably something that you're all familiar with. But at this point, I'd like to go over the housekeeping items for today. Just a reminder, this webinar and its material are the property of AuditNet and its webinar partners. Unauthorized usage or recording of the webinar or any of its material is strictly forbidden. We will be recording the webinar, and if you paid the registration fee, you'll be provided access to that recording within 2 business days after the webinar. Downloading or otherwise duplicating the webinar recording is expressly prohibited. We also have an additional handout that we will be distributing today to those that have paid. It's a new auditor orientation manual. It is an excellent guide and can be used as a template for providing to new auditors on your staff. We kindly request that everyone fill out the brief online evaluation questions that you'll see at the conclusion of the webinar. Your feedback is very valuable, so please take a minute or two to complete the survey. In addition, because this webinar does qualify for CPE credits, we will be putting up polling questions in compliance with NASBR rules. Those answering the questions will receive their CPE certificate by email within 7 to 10 business days. This, of course, applies to those who have paid for today's webinar, and those who have not, you will have an opportunity to pay after the fact if you wanted to receive the CPE as well as the handouts, which includes that new auditor orientation manual. You will have an opportunity both during and at the end of the webinar to ask questions. Submit your questions during the presentation via the chat window at the lower right-hand box on your screen. Type your question and press return to send it. Any question we're unable to answer by the end of the webinar will be answered via email directly within 48 hours. As moderator, I will be helping to launch the polls, showing the results, and monitoring any questions. At this point, also if GoToWebinar does stop working, you may need to close and restart. You can always dial in and listen along with the handouts if you have the handouts for today. Also, if you have any pop-up blockers, please disable them as they will interfere with the GoToWebinar software. And at this point, I would like to turn the floor back to Bill to cover today's topic of Internal Auditing Basics. Bill?
Well, again, welcome everyone. This again is a topic out of my new auditor training class. Again, at the end of the seminar, I'll give you my contact information. Face-to-face training, typically when I do the new auditor training, it's 2 full days of training, and this is a topic we cover on the first day of the class, the basics of what we do, internal auditing. And you know, when I worked at Wells Fargo, we would hire brand new auditors right out of college, no experience at all in auditing. And we'd hire auditors that they may have had experience in the business, but not a lot of auditing background, hired in at a higher level. Let's say they had a trust background, but not a lot of auditing background. And people would come up to me and say, Bill, I'm at a higher level. Do I still need to go through your new auditor class? And I'd say yes. Because I've run into a lot of people in the auditing profession, and maybe they've been in it even for a while, that don't really understand the basics of what we do and how we provide value to an organization. if you're new to the auditing profession, maybe one of your family members or friends have come up to you and say, hey, where do you work? And you tell them, well, I work in the audit department at this company. And they say, oh, well, what do you do? What? What do you do? And my own wife has asked me that question. What do you do again in internal auditing? Well, let me try to explain that in a simple way. When I go out on an audit project, I'm testing internal controls. We talked a little bit about internal controls in the seminar, the recent seminar on risk. We'll talk a little bit more again about those today. But again, when I go out on an audit, I'm testing internal controls, some process, some procedure that mitigates a key risk. That's part of a business process that delivers some product or service that's tied to a key strategy in helping the organization achieve its objectives. What? All I'm saying is when I go out on an audit project, I test an internal control, something that's designed to mitigate risk, a risk that's part of a business process that delivers some product or service in the organization, that's tied to an organization's key strategy that helps an organization achieve its objectives. The management of risk critical to the success of a company. And this value proposition that we provide in auditing, these recommendations we make for strengthening controls, for strengthening the management of risk, ultimately helping the organization be successful. Because working now in the reverse that I just described, you must understand the goals and objectives of the businesses you audit. What are the risks that could prevent that business from achieving its goals and objectives? And finally, what controls could we put in place that mitigate those risks to an acceptable level? Key, the basics of internal auditing today. These are the training objectives. Again, as I've said before, whenever you go through a training program, you should always see learning objectives. I can't tell you how many times I've been to a learning event, and an hour into it, I turn to somebody next to me and say, what are we hoping to accomplish here? So in today's webinar, we'll talk again about the basics of our profession. The IIA, the Institute of Internal Auditing, Institute of Internal Auditors Professional Practices Framework, the standards for our profession. And I'll go out to the IIA website today and I'll show you where the standards are located. I won't go through all the standards. I'll just kind of show you how to navigate through them and talk a little bit about the standards as well. We'll talk about COSO, Committee of Sponsoring Organizations, Committee of Sponsoring Organizations. A key premise if you're in the internal auditing world, if you're in the internal auditing practice. I had a chief auditor once come up to me and say, hey, Bill, what's COSO? And my jaw just dropped. You're a chief auditor and you've never heard of COSO? And this is what I mean. When I had people coming up to me when I worked at Wells Fargo, do I need to go through new auditor training? Yeah. We need to be sure we're grounded in the basics of our profession. And finally today we'll talk about the basic elements of the audit process. What does an auditor do? You test controls that mitigate risks, that are part of a business process, that delivers some product or service in an organization, tied to a key strategy, helping the organization achieve its objectives. Goals and objectives, risks, the mitigation of risks through internal controls. Well, here's the definition of internal auditing, probably revised about 10, 12 years ago, and I just wanted to highlight a couple things. In that first line there, internal auditing is an independent objective. It's something I'll mention a little bit more when we look at the standards, but I think probably one of the biggest things we bring to the table as internal auditors is our independence and our objectivity. Maybe the most important things, independence and objectivity. You don't report to people you audit. I hope you don't. We'll talk about reporting relationships a little bit today. And you're totally objective. You don't work in that business. You can be totally objective when it comes to giving an opinion on the management of risk for that business. Independence, objectivity, we'll talk a little bit more about that, as I said, when we look at the standards. And now in line 2, The two main services that the auditors have provided for years are assurance work and consulting work, and really the assurance work, the bread and butter of what we do. Assurance to who? Assurance for what? Assurance that the management of risk is appropriate, that controls are adequate and effective in managing risk. And to who? To management, to our shareholders, to the regulators, to the external auditors, to the employees that work in this organization. The controls are adequate and effective in the management of risk. All right, adding value. That's one of the things I mentioned at the start. Providing consultation, advice, recommendation on the management of risk. Are these the best controls in place? Are these controls actually working in managing risk? We'll talk much more about that as we get into our presentation today, and we had talked about that a little bit as well in the recent webinar related to risk. That second to the last line, improving the effectiveness, and on the last line of risk management, control, governance processes. Remember the last webinar I said governance. Anything an organization puts into place to help the organization achieve its objectives. Then the management of risk. Then controlling those risks to an acceptable level. All right? A little bit of a review of what we talked about in the webinar we had a little over a week ago with regard to risk. We talked, remember that little pointer analogy I gave you? Excessive risk, the point. No risk, the hook. Excessive risk, inherent risk, no controls. The center of the pointer, prudent risk. Residual risk, after controls have been applied, prudent risk. Again, I'll have my contact information after the webinar today. If you have any questions on anything that we're talking about or something wasn't clear, I totally mean this. Please contact me anytime. I'll definitely get back to you. Any questions at all? Again, our role, just kind of these lead-in slides here, just getting us grounded, how we provide value to an organization. Remember, those of you who attended the webinar on risk a little over a week ago, the concept of control adequacy and control effectiveness, that first line you see on this slide here. Remember what we said about control adequacy, control design. On paper, does this look like a good control? On paper, does it look like this control would have a significant effect on mitigating risk? I gave a little example in the webinar a few weeks ago related to controls over a vault. Since I worked in a bank for a large part of my internal auditing career, I used a lot of bank examples. And I said, I went on an audit project one time and I looked at controls over the vault. And one of the controls was, does it take two people to open the vault door? No one person should have the key and the combination to the vault. One person should have the key, another person should have the combination. On paper, that looks like a great control. Adequacy now, design. Definitely looks like it would have a substantial effect on mitigating the risk of theft related to the vault, the chance of someone stealing money out of the vault. But is it actually working? And that's what control effectiveness is. Is the control working? So adequacy of control design on paper is a good control, but is it actually working? Effectiveness. And then I watched them open the vault, and in fact, it did take two people to open the vault, but then we found an unlocked drawer with numerous spare keys to the vault. So whoever had the combination when someone wasn't looking could have got at a spare key. The control is not effective. Again, just getting us grounded on control terminology or basic audit terminology here. Control adequacy, control design, control effectiveness. Is the control actually working? When we plan an audit, we're typically looking at control adequacy. When we're in field work testing controls, we're testing for control effectiveness. And the bullets you see on this slide, if controls are adequate and effective, they should help ensure the reliability and integrity of financial operational information. They should help ensure the effectiveness and efficiency of operations, help ensure the safeguarding of assets, help ensure compliance with policies, laws, regs, and ensuring the effectiveness and security of computer systems. Those bullets there, that's what controls should be doing if they're both adequate and effective. Our role, again, the first two bullets there, the first bullet being assurance work, the second bullet being consulting work. And I didn't really mention consulting too much. I talked about assurance just a couple minutes ago, but consulting work is a piece of our role as well. I'm sure many of you may get involved in consulting type projects, but typically there's a waiting period if you've done consulting work before you can actually do assurance work. Again, that independence, objectivity that you see in the first line again in this slide, we never want to compromise that. So if you were involved in helping design controls as a consultant in a project, you probably wouldn't be testing for doing the assurance work testing until there's been a period of time. But one thing I want to mention, look at the last bullet on this slide, a source of talent for an organization. Many audit organizations are a source of talent. By that I mean people don't remain in auditing their whole life. Some do. I did. And it's a great career. But other people will leave auditing because they become experts in the businesses that they audit for that company, and then they'll go into those businesses. For example, I worked at Wells Fargo. Our trust audit group, those people became experts in auditing our trust businesses. And eventually, some of them left the audit group and became trust officers. Or maybe they were IT experts and they became went into the IT business. Or they became banking experts and became business bankers or things like that. We're a source of talent, but one of the things I used to tell our new college hires, I used to recruit for our associate program at Wells Fargo. And so when I would interview these students at the colleges, I would try to sell them on what we do, just what I'm doing today. What does an auditor do? And I would say to them, do you know what you want to do when you graduate? And a lot of them would say, well, I'm an accounting major. I guess I'll, be an accountant, or maybe I'll work in public accounting, or I don't know. I'd say, well, where could you go right out of college and learn the whole company? What do you mean? Well, let's say you came to Wells Fargo. You'd learn about trust. You'd learn about mortgage. You'd learn about IT. You'd learn about banking. And even if you don't want to be an auditor the rest of your life, you're going to have an excellent understanding of those businesses. So maybe, like I just said, you might want to go work in mortgage or trust or IT. And I'll tell you, I had so many students after I talked to them about what we do would be basically saying, make me an offer. And I did both public accounting. I worked in public accounting for 3 years and internal auditing for a long time, as I said. But again, internal auditing, much broader perspective of an organization, not just financial controls, not just the financial statements. And again, a great way to learn the company. So those first two bullets, the first bullet, the assurance work, the second bullet, consulting work. Now, who is our main customer from an audit standpoint? Who is our main customer when it comes to internal auditing? Well, I guess I would have to say the Audit and Exam Committee. Typically, this is a committee of the board of directors of an organization. And if the audit department reports correctly, your chief auditor should report directly to the A&E committee. All right, functionally to the A&E committee, administratively to the chief executive officer or the chief risk officer. That helps ensure our independence, just what I was talking about earlier. You never want to compromise your independence. And the reporting relationships helps ensure that independence, right? I report to the board of directors if I'm the chief auditor, and I get my day-to-day guidance from the chief executive officer. I don't know if you remember the WorldCom fraud a few years ago, where the fraud was being committed by the chief financial officer. And the audit department did not report the way I just described. They reported to the chief financial officer. The audit department reported to the chief financial officer who's committing the fraud. And Cynthia Cooper, and I don't know if you've heard her speak, but she gives talks throughout the world now on her experience related to this fraud and what a difficult job they had in uncovering the fraud because they did not have an independent reporting relationship. And the chief financial officer was basically saying, don't look at this. Don't go there. I'm working on something. Go there later, making their job extremely difficult. We'll talk a little bit more about independence and objectivity, but the reporting relationship to the A&E committee is critical. Again, they are our main customer. Well, just to make sure you're all paying attention, let's go to our first polling question today. And I'm just going to launch our first one here. All right, which one of the following is the main customer of the audit department? Which one of the following is the main customer of the audit department? And Jim, I know you're allowing me to run the polls today. Once I see that most of the people have voted, I'm just going to click the close button. I don't see a share button right now, but maybe that pops up after I hit the close.
Bill, the share button will appear after you close the poll.
Okay, thank you.
And you can see right now we've got about 69% that have voted.
Yep.
So remember, if you are looking for CPE for today, in accordance with NASBA rules and standards, you must answer the polling questions, all of them. So we've got just over 80%. We'll leave the poll open for another 20 seconds or so.
Again, who is our main customer? All right, I'm going to go ahead and close the poll here, and I'll share the results. And again, you can see the majority of you, not everyone, picked letter C, and that is the correct answer. The audit committee is our main customer. But good job. I mean, stay with it here. We're just doing the basics today. Let's go on here talking a little bit more about what we do and are now lead in to the standards for our profession. Okay, so little history lesson for you. In 1977, the Foreign Corrupt Practices Act came out. Not going to spend a lot of time on the FCPA today, but the reason I'm bringing it in is the year after the Foreign Corrupt Practices Act came out, the standards for our profession were implemented. The first time the standards for the internal auditing profession came out were in 1978. You can see here in the first line, this Foreign Corrupt Practices Act came about because of illegal payments made to officials in foreign countries. And if I go to the next slide here, you'll see that the main thing that came out of the Foreign Corrupt Practices Act was that if you were a publicly traded company, you had to maintain a system of internal, and I'd like to underline this next word, accounting controls. Very narrowly defined, the controls that really matter here are accounting controls. And what you see in the bullets there are what accounting controls should help ensure. But when we talk about COSO here a little bit later in our webinar today, you will see the definition of internal control much more broad, that it encompasses more than just accounting controls. But again, the Foreign Corrupt Practices Act driving the implementation of accounting controls and ultimately driving the standards for our profession, or at least helping to see that it's important that as internal auditors we have a professional practices framework. Well, I'm actually going to go out to the IIA website here and just show you a little bit about the standards for our profession. Now, where is the IIA, the Institute of Internal Auditors website? It's always at www.theiia.org, www.theiia.org. If you ever take the Certified Internal Auditor exam, you will want to download these standards. Now, how do you get at the standards? When you go to this website, as I did right now, how do you get at the standards? Well, you'll notice the very first tab here is for standards and guidance, and I just clicked on that, and that's this page that you're seeing in front of you right now that's come up here. All right, and then you've got the standards for our profession now in front of you, or at least the links that will take you there. Now, why do I show you this today? Again, our webinar is all about internal auditing basics, because now you're seeing the expectations for our professions captured in the International Professional Practices Framework. There's some mandatory guidance for internal auditors, and there's some strongly recommended guidance. Again, if you do take the CIA exam, I'll guarantee you this will be on there. What constitutes mandatory guidance? the definition that we just looked at a little bit ago, our code of ethics for the internal auditing profession, and what I'll show you here in just a minute, the international standards for the professional practice of internal auditing. All right, those are the 3 mandatory guidance areas that are part of the IPPF, again, the International Professional Practices Framework. Strongly recommended guidance, position papers, practice advisories, practice guides. And you know, when you do take the CIA exam, they do test your knowledge on those as well. In fact, the CIA exam tests you heavily on your knowledge of the International Professional Practices Framework, especially the standards. Okay? Now, if you become an IIA member, you'll be able to get at the position papers, the practice advisories, the practice guides. Those are, again, strongly recommended guidance that can help you in your internal auditing work. But the core of the Professional Practices Framework, and I'm just going to click on this now, the link here to the international standards for the professional practice of internal auditing really being the core here. Now, you'll notice when you look at the standards, there's an introduction to the standards. There are attribute standards and performance standards. Before I kind of go through this here a little bit more, let's take a look at this page here that talks a little bit about the standards here. Now, again, they were just recently revised this month, so you always want to be sure you go to the IIA website to make sure you're looking at the current standards. If you don't do that, it's possible you won't be looking at, if you had a hard copy from a year ago or something like that, it's not going to be the current standards. And certainly if you take the exam, the CIA exam, you want to be sure you're looking at the current standards. Well, let me click on the introduction here now, and let me just mention a couple things about the introduction to the standards. Look at the bullets in the middle here that say the purpose of the standards. 2, delineate basic principles that represent the practice of internal auditing. Provide a framework for performing and promoting a broad range of value-added internal auditing. Establish the basis for the evaluation of internal audit performance. Foster improved organizational processes and operations. All right, just kind of generic here, but let me just go down and give you a little bit more information here. You should always know this about the standards. I'm just going to highlight this, and then I'll back off because I don't know if this makes it harder or easier for you to see. But the structure of the standards is divided between attribute standards and performance standards. That's another thing you'll want to remember if you take the CIA exam. Attribute standards address the attributes of organizations and individuals performing internal auditing. The performance standards describe the nature of internal auditing and provide quality criteria against which the performance of these services can be measured. So always remember 2 main categories in the standards. You have attribute standards, again, more the characteristics, the attributes of organizations that perform internal auditing, and then the performance standards themselves, criteria against which we measure our performance in performing internal auditing. All right, you've got attribute and performance standards. Now, what is this? Implementation standards. As I show you some of the standards here in a minute, you'll notice that some of the standards relate to assurance work. They have a little letter A after them. And some of them relate to consulting work. They've got a little letter C. And that's how we implement the standards for assurance work and how we implement the standards for consulting work. So just remember 2 main categories of standards. I'm going back to the top here. Attribute standards and performance standards. And then with the attribute and performance standards are implementation standards for assurance work and implementation standards for consulting work. Well, let me just show you some attribute standards here first. Now, I'm using the online version of the standards. You can download all the standards to PDF. They have PDF documents here, so you wouldn't have to go through it like I am today. But if you want to just view the standards online, this is probably the easiest way to do that. You'll notice that the attribute standards all start in the 1000 series. All right, so you know if it's going to start with a 1, it's going to be an attribute standards. And as I'll show you here in just a minute, all the performance standards start in a 2000 series, starting with the number 2. All right. So again, a whole host of attribute standards, and obviously I'm not going through them all today, but just to show you how they're organized here and things that I've already mentioned here. Let's look at standard 1100 independence and objectivity. All right, that's kind of what I was mentioning earlier, the importance of independence and objectivity. And then with Standard 1100 is 1110, organizational independence. Chief auditor must report to a level within the organization that allows the internal audit activity to fulfill its responsibilities. And again, the correct way for the chief auditor to report is directly to the audit committee functionally and directly to the chief executive officer or the chief risk officer administratively. That's the right way, the correct way of reporting for an internal audit organization. Again, this is just attribute standard 1110 with regard to organizational independence. Show you another one. Here's individual objectivity. All right? And again, it talks about our objectivity. And, you know, as I mentioned, you never, ever want to compromise your independence and objectivity. You know, if I can really think of one of the biggest things you bring to the table as an internal auditor is your independence and objectivity. You don't report to that person you're auditing. You don't work in that business on a day-to-day basis. You can be totally objective in giving an opinion related to what? On the management of risk. Are controls adequate and effective in the management of risk? What does an auditor do? We test controls that mitigate risks, that are part of a business process, that are tied to a key strategy that helps the organization achieve its goals and objectives. All right. You know, I remember being on an audit project one time. I was supervising the audit. When I got out to the field to review work papers, our auditors had all these gifts they'd received from the client, from the business partner. And I was like, where'd you get these? And they were like, oh, they're so nice. You know, they gave us all this stuff. And, you know, it was nominal in an amount. Probably really doesn't influence our opinion. But I always had an approach. I never would accept anything like that from the people I audited. I just think it's policy. Because even on the face of it, I wouldn't want it to look like my objectivity might be compromised here. Here's another big one for our profession here. Let's look at 1210 proficiency here. I'm just going to page down here. Now remember what I said. Attribute standards and performance standards. And in with the attribute standards, the letter A stand for assurance work. The letter C stand for consulting work. All right, that's how you know if it's assurance standard or consulting standard. Remember, letter A stand for assurance work. Letter C stand for consulting work. All right. Let's go to standard again now. I'm just going to page down here. Let's look at this one under proficiency, and this is a big one, 1210A2. With regard to fraud, all right, there's a lot of questions. Are auditors responsible? Let me just go back here again. Are auditors responsible for the detection of fraud? I mean, is that their main job here? Well, look at A2. Internal auditors must have sufficient knowledge to evaluate the risk of fraud and the manner in which it is managed by the organization, but are not expected to have the expertise of a person whose primary responsibility is detecting and investigating fraud. In the normal course of your work, would you be able to identify a red flag? Would you be able to raise your hand? Would you raise your hand if something didn't look right? Would you know what is normal for this business and what is abnormal? You're our first line of defense when it comes to fraud. I've seen frauds go on for years where auditors passed on things that they had looked at because they thought it was no big deal. If nothing else, you can identify the red flags and you can get other people involved to take a look at them. People that are fraud experts, that are trained in these types of things. Legal people as well. But again, the main point of the training right now is just to show you that where the standards are located, where you can find different standards. Here's another one, continuing professional education, which obviously I feel extremely strong about. Internal auditors must enhance their knowledge, skills, and other competencies through continuing professional development. You know, I don't know if you saw this the other day. I saw this definition, must have been in the news somewhere, the definition of an old person. What? What is the definition of an old person? It had nothing to do with chronological age. The definition was someone who has stopped learning. someone who has stopped learning. I thought that was a great definition because you know this, right? I mean, there's people 70 years old going back to college, and there's people 40 years old that are saying, don't teach me anything new. Again, one of the things you'll notice if you're new to the internal auditing profession is a big emphasis on continuing professional development, especially if you do obtain the Certified Internal Auditor designation. You must report certain continuing professional education hours to maintain your certification. A big piece of most audit departments is the continual development of their team. Never stop learning. Don't grow old, at least not from that definition. And 1300 here, just to briefly now, before I get out of this, many organizations, internal audit organizations, have a quality assurance and improvement program, a QA function. They may have an in-house function that reviews your work. It's kind of us auditing us, making sure we're doing the right things, that we're complying with the standards. You know, one thing I should mention as I travel around the country and I'm doing training for audit organizations, and I'll look at their policies and procedures, many audit organizations link their policies to the standards, to these standards that I'm showing you. In other words, their policy may start with standard 1300 here, and then they'll specifically have how it relates to their organization. Really good way to have your internal auditing manual constructed, your policy manual, the standards driving you to comply with the policies through your specific procedures. Internal audit organizations are required to have an external review every 5 years. In other words, like the IIA or a public accounting firm or some consulting firm come in and make sure you're doing the right things. What? Make sure you're complying with the standards. That is an IIA standard. That's part of the standard 1300. Well, again, these are just some of the attribute standards. Again, I'm just on the IIA website here. If you were to look at the performance standards, that's the next link over here. And again, a laundry list of performance standards that are showing up here. I'm not going to go through these today, but again, just like I was doing on the attribute standards, you can click on these. And you know, just one thing, if you look at standard 2130 for control, and again, you'll notice this relates to assurance work, 2130A1. The internal audit activity must evaluate the adequacy and effectiveness of controls in responding to risks. There you go. Control adequacy. On paper, are these good controls? Are they well designed? Does it look like these controls would have a substantial impact in mitigating risk to an acceptable level? And control effectiveness, are the controls actually working? I know we talked about control adequacy and effectiveness extensively in our risk webinar. Again, you'll see the tie directly to the IIA standards. Well, don't forget about the standards. These are on the IIA website. Again, you'll always be able to find these by going to www.theiia.org and just click on Standards and Guidance. Let's go back to the PowerPoint here. And again, if you have any questions on that, don't ever hesitate to contact me on anything we're talking about today. But let's go to our second polling question. And let me just launch this one here. Which of the following, let me get that launch for you so you can see it. Which of the following is not mandatory guidance in the IIA Professional Practices Framework? Now we're looking for a false answer here. Which of the following is not mandatory guidance? Remember the three that were. One of these is not mandatory. Which one of these is not mandatory guidance? And Jim, did I launch this correctly here? I clicked on, let me just go back here and I'm going to redo this here so you can see it. I don't see the launch button here, Jim. I just see the share button.
It looks like you closed the poll too early.
I didn't close it. It was closed from the first one I did today.
You may have closed the second one.
Okay.
I will go ahead. Just continue on. I'll go ahead and I will re-enter this
Okay.
poll, and you can come back to it at a later time.
Sounds good. Thanks, Jim.
Okay.
We'll come back to that polling question. And now let's go on to our next topic here, the lead-in to COSO, which is an acronym that stands for Committee of Sponsoring Organizations. Now, before I get into that, remember we started the webinar today with what does an auditor do, the value that we provide in the internal auditing industry. And for companies overall now, companies that get it, if you will, they understand the importance of risk management to the success of their company. Control comes first, before we look at profitability, before we look at growth, okay? Successful companies adhere to the following order: control, then profitability, then growth. The management of risk is essential to the success of the company. All right? Now, who's responsible for the management of risk? This is a review from some of our past webinars, but I don't think I can emphasize this enough. Always, always, management is responsible for the management of risk. Always. All right? Again, they're in the business every day. You know, you're going to have to articulate this to management numerous times during your career in internal auditing in your own tactful way, okay? I mean, I think I mentioned this in one of the other webinars. We had a large fraud once at Wells Fargo, and when we issued our audit report, and it was a reconciling control breakdown, management said, well, we're not responsible for understanding the reconciling policy. Audit should have trained us on the reconciling policy. No, management, you're responsible for control. Always, always. Okay? Don't ever forget that. All right, Jim, I'm going to try the next polling question here, if I can. Otherwise, I'll come back to this one as well. So, Jim, maybe, I don't know if you want to take a look at this one, but right now, I don't see the launch button. If I go to the third polling question here, would that be appropriate to go to the third polling question here? Here it is. Okay, now it's ready. All right, so here we go with our third one. Who is responsible for the management of risk? And don't miss this one, okay? Who is responsible for the management of risk? Yay, everybody's getting it right. And 76% of you have voted. Again, to get the CPA, for those of you who have paid today, you'll need to answer the polling questions. And if so far everybody's doing really well on this one, remember we're looking for the true answer here. Who is responsible for the management of risk? All right, most of you have voted here. The correct answer is obviously management. As I said, you'll need to articulate that in numerous ways during your career in internal auditing. We're here to help, right? What? Well, management's responsible for managing risk, but we're here to give recommendations to management and helping them manage risk appropriately. Okay? You're testing controls that mitigate risks, that part of a business process, right? That delivers a product or service tied to a key strategy. Okay, I'm just going to close the poll and again share the results here. And again, you'll see 96% of you selected the correct answer.
Bill, I've created that other question, so if you wanted to go ahead and launch it, it should be listed as 2A, the next one in the sequence.
Got it? And here's the one we were talking about earlier. Which one of the following is not mandatory guidance when it comes to the professional practices framework? We're looking for a false answer on this one. And thanks for doing that, Jim.
You're welcome.
Not mandatory. And most of you have voted here. Again, the false answer on this one, the practice guides are not mandatory. I'm going to close the poll and share the results. A few of you missed that one, but remember the definition of internal auditing, the code of ethics, and the standards are mandatory. Practice guides in this question are not mandatory. Okay, let's go back to our PowerPoint here, and now let's talk a little bit about COSO. So in the late 1980s, the Treadway Commission, all right, was organized. And basically, it was organized because of fraudulent financial reporting. I mean, very similar to what happened with Sarbanes-Oxley in the early 2000s. In the late 1980s, you had a similar problem with fraudulent financial reporting. All right? And you can see basically, you know, what their report came up with. The second bullet is the one I really like to highlight most, that the tone set by senior management is the single most important factor contributing to the integrity of the financial reporting process. And by that I mean culture. But now why show you this slide here? Because as a result of the Treadway Commission, a committee of sponsoring organizations, COSO, was formed to help support implementation of the Treadway Commission recommendations. It was made up of a number of professional organizations like the American Accounting Association, the American Institute of Certified Public Accountants, the Institute of Internal Auditors. And basically, their goal was to redefine internal control. Now remember the definition of control we looked at earlier when we talked about the Foreign Corrupt Practices Act. It talked about accounting controls, very narrowly focused around accounting controls. Now, COSO gives a much broader definition of internal control, that it is a process affected by an entity's board, management, and other personnel designed to provide reasonable assurance, not absolute assurance, regarding the achievement of objectives in the following categories: effectiveness and efficiency of operations, reliability of financial reporting, compliance with applicable laws and regulations. If controls are working, they help ensure the three bullets that you see in this slide here. It's a process, not a one-time event, designed to provide reasonable assurance around the management of risk, around helping the organization achieve its goals and objectives. This concept that I'm going to share with you over the next few slides, COSO, is fundamental to our profession. And I'll show you why here in a minute, okay? But again, here's the definition of internal control. Now the COSO framework. Now I know this is kind of hard to see, and I'll give you much more detail here in a minute, but I actually pulled this out of a report that I had, and just look at the face of this cube here, if you would, for just a minute. What you're seeing on the face of this cube, where you see at the bottom there, control environment, risk assessment, working up, control activities, information and communication, and monitoring. If controls are working, if the company, let me put it this way, if the company is managing risk appropriately, it should have a strong control environment, a strong risk assessment process, strong control activities, strong information and communication, strong monitoring. Now what is this? What does this mean? Well, here is right out of the COSO report the definition of those 5 components. Remember now, if a company is managing risk appropriately, it should have these 5 components of internal control in place, and here they are. The control environment provides an atmosphere in which people conduct their activities and carry out their control responsibilities. It serves as the foundation for the other components. Within this environment, management assesses risk to the achievement of specified objectives. Control activities are implemented to help ensure that management directives to address the risks are carried out. Meanwhile, relevant information is captured and communicated throughout the organization. The entire process is monitored and modified as conditions warrant. Now that still may not mean a whole lot to you. So let's go through each of the 5 components of internal control. Now, as I walk you through each of the 5 components, let me also say this. Again, as I travel about doing training for audit organizations, many audit organizations base their control rating, their report rating, on these 5 COSO components. They rate the business for control environment. They rate the business for risk assessment, for control activities, for information and communication, and for monitoring, and to come up with their overall audit rating. If this is what the management of risk is all about, if these are the components of internal control that should be in place, let's see how well the business is doing after we've audited that business. Well, let's look at each component here separately. Now, if you were to look at the actual COSO report, it would be a pyramid with control environment being the base of the pyramid. Again, culture here, tone at the top. All right? Code of ethics comes into play here. Most companies have a code of ethics, and I know when I was at Wells Fargo, for example, if we had a teller steal money out of their teller drawer, automatic termination because they violated the code of ethics, and that's all part of the culture of an organization. Controls matter. Management of risk is essential to the success of our company, and this comes from the very top of the organization. Remember I told you a story, I think in the webinar I had just a little over a week ago when I was hired at a different company one time. They put me on a special project that merged 2 proof operations here in the Twin Cities, and they didn't have an implementation plan. They didn't have a reconciling policy. The day after the implementation, the banks had a balance of $1 billion. I come to Wells Fargo, strong control environment, corporate policy program that tells us how we're going to do our business, a corporate-wide reconciling policy that requires all general ledger accounts to be reconciled. Culture, that's really the main thing I want you to get out of this. Tone at the top. It's kind of like a parent setting an example. When senior management says controls are important to the success of our company, it trickles down to all levels in the organization. Just like, parenting. I've got 4 kids, and I'll be honest, I was not the perfect parent when my kids were little. I always tried to set a good example, but it didn't always help out. I mean, I remember one time I was called to a parent-teacher conference, and my preschooler, Joey, was in preschool at that time, and when I met with his teacher, she told me they asked all the little preschoolers what they wanted to be when they grew up, and they were going to share that with us at the parent-teacher conference. So here I am, sitting across from Joey's teacher, and she's going to share with me what Joey said. What does Joey want to be when he grows up? Well, in my life at that time, all I did was watch baseball because here in Minneapolis that year the Twins were in the World Series, and I guess maybe I cut my grass, but other than that, I was in front of the TV watching baseball. When I got to my parent-teacher conference, the teacher said, Joey said he wants to be a dad who watches baseball and mows his lawn. Okay, I get it. You see what, trying to make the link here to COSO is that parents sets an example for their kids. Senior management sets an example for their company. And if you don't have a strong control environment, the rest of these components I'm going to show you aren't going to matter. Maybe this is the most important piece of the COSO framework, the first component of internal control, a strong control environment. The second component, risk assessment. Now, who's responsible for risk assessment? Management, right? Management assesses risks in their business. Management identifies and assesses risks in their business. They know what risks are present in their business. They know how significant the risks are in their business. Some companies have a formal risk assessment process that management must follow. It can be an automated tool, part of the Sarbanes-Oxley process, the SOX process, where management is forced to identify and assess their risks, to identify and assess their controls and the mitigation of risk, at least on an annual basis every year. It's management's responsibility. Always remember that. The third component of internal control, the controls themselves that manage the risks that we just talked about in the previous slide. And remember the concept of control adequacy and control effectiveness. On paper, are these good controls? Are they well designed? control adequacy. And now, are the controls actually working? Control effectiveness. You as an internal auditor should be an expert eventually in the management of risk and an expert in evaluating the adequacy and effectiveness of controls. These aren't our controls, these are management's controls. Management's controls for managing risks in their business. Now there are numerous types of control activities. Some controls prevent bad things from happening, some controls detect bad things that have already happened, and some controls direct people to do the right things. Preventive controls, like my example earlier, dual control over a vault. It takes 2 people to open the vault door. It prevents one person from getting into the vault and stealing money out of the vault. And I would say in my career in internal auditing, probably the majority of controls I looked at were preventive in nature. They're more cost effective. And obviously they're preventing things we don't want to happen, bad things, right? Detective controls detect bad things that have already happened. I think of reconciling as a detective control. The fraud may have already occurred, but if I've got a reconciling control in place, let's say it was a general ledger fraud, an account that had been manipulated for fraudulent purposes, a good reconciling control will detect that fraud and help mitigate our losses if we catch it early enough. That's what I talked about earlier with the red flags of fraud. If you identify a problem or a red flag, that you're able to raise your hand and not pass on it, and at least get some other eyes to look at it. And then finally, directive controls. I think of training as a directive controls, giving people examples of what they should be doing in their day-to-day activities. And you know, when it comes to the management of risk, remember what we talked about in our risk webinar a little over a week ago, that to have risk, always, you must have probability and impact. Probability and impact, both, to have risk. Probability, the chance something bad will happen. Impact, the loss itself. Preventive controls probably mostly get at the probability factor, and detective controls probably mostly get at the impact factor. Not always, but preventive controls and detective controls working together in the management of risk, and directive controls as well. I know when I took the CIA exam, questions related to preventive, detective, and directive controls were on there. Testing your knowledge of control activities, the third component in the COSO framework. The fourth component, information and communication. Does management have good information if controls are working or not? What? All I'm saying is, management, you're responsible for the management of risk in your business. Do you have good information to know if the management of risk is working, that those controls you put in place are actually working? Or if they're not, you know immediately they're not working? And communication, do people understand their control responsibilities? I know in audits I've been on, when we've had turnover of key people, a lot of times we've found control problems because the communication ball got dropped. The new people didn't understand their control responsibilities, and the controls were not effective. Information and communication, the fourth attribute of the COSO framework. All right? Good information. I know if controls are effective or not. Maybe it's a budget report or something like that. Here's the actual. Here's what I expect, the budget. Why are we $1 million over budget for this one account? Maybe it's a fraud. Maybe it's something else. And communication, I know my control responsibilities. And finally, the fifth component of the COSO framework, monitoring. Management monitors their controls on an ongoing basis to ensure that they are both adequate, they're the right controls, they're well designed, and they're effective. They're actually working. Control environment, culture. Risk assessment, what are the risks? How significant are the risks? Control activities, the controls themselves for mitigating those risks. Information and communication, do I know if they're working or not? Do I understand my control responsibilities? Monitoring them on an ongoing basis to make sure they're both adequate and effective in the management of risk. These 5 components of internal control that I was just talking about, many audit organizations use them in evaluating the risks in their organization. Just going back to that slide here. Again, when we're doing our audit rating, how did they do on control environment? How did the business do on risk assessment, control activities, information and communication, and monitoring? Let's go back. Let's go to our next and our last polling question today. And let me put this up in front of you here. Which of the following is not a COSO component of internal control? We're looking for a false answer here. Which of the following is not a COSO component of internal control? So far, the responses look great. We've got 83% of you who have voted. Remember, you need to answer the polling questions to obtain the CPE for the course. And again, for those of you who have not paid for the webinar today, you'll have an opportunity to do that after the webinar today. You'll get the certificate. You'll get all the handouts. And again, especially if you have a professional designation that you're trying to keep up for continuing education, this would qualify for that. All right, I'm going to close the poll because 100% of you answered correctly that field work is not a COSO component. Control environment, risk assessment, monitoring are all components of the COSO framework. Excellent job, everyone. All right, let's go to our last topic today, the audit process overview. All right. So I thought I would end our presentation, our webinar today, just briefly walking you through the audit process. If you're new to internal auditing and you're not really familiar with the different stages, the different phases of the audit process, I thought I would just briefly show you that here today. Again, I'll give you my contact information after the webinar today. When I do this in the live class, we spend a whole, well, at least a half a day, I should say, on field work alone. But this is just a high-level walkthrough of the audit process. So I like to think of the audit process as cyclical, like a clock, if you will, starting with understanding the enterprise kind of at the top of the clock here and going around in a clockwork fashion. So where you see understanding the enterprise to the actual starting of the execution of the audit plan, this is the creation of the annual audit plan. These first 5 boxes, which I'll talk briefly about in the next slide here in just a minute, are where an audit organization identifies the businesses they will audit in a calendar year, and it's based on risk. Once the execution of the audit plan starts, now we're at the bottom of the clock here where it says Analyze Business Process and Risk Assessment. The in-charge auditor will typically perform a formal analysis of the business that we're going to be auditing and a formal risk assessment of the business. What are the risks in the business? What controls has management put in place? What controls will we test when we get to field work? I'll talk more about each of these components of the audit process in the subsequent slides. When we get to field work, again now, as we go up on the clock here, we start to execute our audit program, where the audit program drives us to test the effectiveness of the controls. Finally, at the end of the audit project, we issue a formal report to management, where typically we'll have an audit rating attached to that report. And then in the validation, or many audit organizations call this follow-up, we follow up on the issues that we identified. We validate, basically, that the issue is no longer a problem, that management has corrected the issue. More to come now, and much more to come, a little bit more detail on each of the components of the audit process now in the subsequent slides. Well, the annual audit plan, common pretty much to all audit organizations. Your chief auditor, working with your senior leaders of your audit organizations, typically create the annual audit plan. And again, as I said earlier, it's based on risk. And I just put in different types of risk on this slide: accounting, technology, operational, and it depends on the organization you work in what risk categories may apply to your organization. The audit universe basically is any business in your company that could be subject to an audit. Any business in your company that could be subject to an audit. Many internal audit organizations use the general ledger or something to make sure that they've captured the entire audit universe. All the businesses of your organization are evaluated to determine risk and how frequently they will actually be audited. The thing I want you to get out of this slide is remember this. The annual plan is always driven by risk. You have all of these businesses in your organizations that could be audited. But obviously, based on risk, the higher risk businesses are going to be audited much more frequently than the lower risk businesses. And it's in this creation of the audit plan, this formal analysis of risk in each of the businesses of your company, that determines what businesses will be audited in a given calendar year. Some businesses are audited every year, some every other year, some every 3 years, depending on your audit cycle. And it's typically from the time you ended the previous audit project to the time you will start the new audit project. All right? Is it going to be every year, every other year, every third year? Again, the higher risk businesses should be audited much more frequently than the lower risk businesses. Now, once the plan is set, here is the steps in the audit process itself. Some things go on before the planning phase, and some things happen after the validation phase, but the main phases of the audit process are planning, field work, reporting and wrap-up, and validation, or if you want to substitute follow-up for validation, many audit organizations call validation follow-up. Planning, field work, reporting and wrap-up, and follow-up. And let's briefly take a look at each of these steps in the audit process. Well, first of all, before planning starts, what happens? Now, AIC stands for Auditor in Charge. So the assignment of the auditor in charge will happen early on, typically by your management team or somebody at a senior level in your audit group will identify who will be in charge of this audit project. The in-charge auditor will start looking at information related to the business, typically a formal notification to the business partner, to the client that an upcoming audit is being planned, and then actually requesting information that's needed for planning from the business partner. And you can see the auditor in charge typically performing most, if not all, of these responsibilities. All right, so upfront identification of the in-charge auditor, upfront notification of the business partner. Again, the business partner are the people we're auditing. So I know terminology differs between organizations. Some people call them clients. But again, most audit organizations do not do surprise audits. The businesses know when we're coming to audit them. But now here's the first phase of the audit process, planning. And typically, AIC, again standing for Auditor in Charge, the auditor in charge performing most of these components of the planning phase of the audit process. Business analysis. Now, what is that? Well, one time I attended a seminar, and the instructor, it was an auditing seminar, and the instructor said, what's the very first thing you should think about if you're assigned an audit project? And I think we all yelled out, risk, risk. And he started hammering his fist into his hand. He said, no, what's the business? Do you understand the business before you even think about risk? What are the goals and objectives of the business? What are the key strategies of the business? What are the regulations that impact the business? What technology does the business use? A formal business analysis up front, understanding the business. Flow charting may come into play here to help us get our arms around the business. And then a risk assessment. What are the risks in the business? How significant are the risks in those businesses? I'm just going to show you something here. This is the spreadsheet I showed you in our previous webinar on risk. This is a spreadsheet that many audit organizations or one like this that they use for the risk assessment process. And in other words, this is what the in-charge auditor uses in the planning phase when it comes to risk assessment. Look at this column D here. What are the risks in the business? How significant are the risks? High risk, very high, moderate, low. And that's always based on impact and probability. What controls has management put in place to mitigate those risks? Are these automated, manual? Are they preventive or detective? But ultimately, where it gets to will we test this control, will we test this control in effect for effectiveness in field work? This is a formal risk matrix, a formal tool that in-charge auditors use for identifying risks, assessing their significance, identifying controls that management has put in place to address the risk, and ultimately making a decision, will we test the control for effectiveness when we get to field work? Control adequacy is assessed in this tool. On paper, does this look like a good control? Is it well designed? And then are we going to test it for control effectiveness? All right, let's go back to the PowerPoint here. Planning phase of the audit process, two big deliverables, an analysis of the business and a formal risk assessment. And even if you're not the in-charge auditor, I would encourage you, if you're working on this audit, you should look at the business analysis. You should look at the risk assessment. It'll give you good information about the business that you're auditing and the underlying risk associated with the business. The audit scope, definition, audit program development, the program that will guide the audit team in testing control effectiveness when they get to field work. A formal engagement letter delivered to the business partner that outlines what areas of risk we're going to look at, what areas of the business we're going to be testing control effectiveness in. And then a formal kickoff meeting, and typically that's when we would give the business partners the formal engagement letter, introducing the audit staff, again outlining the areas that we're going to look at, and the timeline as well, when we anticipate field work beginning, when we anticipate field work ending, when we anticipate having a report to them. Everything basically covered, the whole timeline covered in the kickoff meeting as well. The planning phase, the in-charge auditor assuming primary responsibility for the analysis of the business, the risk assessment, the audit program development, the development of the engagement letter, and leading the kickoff meeting as well. When I teach my auditor in charge class, I spend a full day on planning the audit, on the planning phase of the audit project, because I always felt if you get it right in planning, you have a much better chance to get it right in field work, reporting, wrap-up, and follow-up. All right? There is a right way and a wrong way to plan an audit. We cover it in detail in the in-charge auditor class that I teach. Now the bread and butter of what we do, where we're testing control effectiveness, field work. And again, when I teach my new auditor class and in the in-charge auditor class, we spend a half a day on field work. In fact, in the new auditor, probably even a little bit more than that. Now, 75 days, I mean, that's just, some audit organizations have a guideline for how long field work should take. It can certainly vary between audit organizations. But the big thing I want you to get out of this slide is this. Always remember in field work, we're testing for control effectiveness. Are the controls actually working? I mean, we've done all this work in planning to identify the risk, to assess the risk, to assess the controls for control adequacy. Now here in field work, we're actually testing them to see if the controls are mitigating risk. Are they actually working? Like my vault example earlier, does it really take two people to open the vault door? Well, they've got this drawer of unlocked keys. No, one person could get into the vault if they had the comm. The control was adequate. On paper, it sounded like a great control. But now here in field work, we identify it's not effective. Audit sampling. We won't talk sampling today, but we spend a little bit of time on sampling in my auditor classes as well. And during field work, if we do come across a control weakness, and if it's significant enough, we draft a formal issue and recommendation and give it to the business partner in writing. The recommendation, basically, our thoughts on the best ways to correct the issue. The recommendation should address the root cause of the issue. But we always sell our recommendation based on risk. This is something we talked about in the risk webinar a little over a week ago. You go to a business partner. Let's say, for an example, You're testing reconciling controls, and you identify a control weakness. They're not reconciling this account. You go to a business partner and you say, hey, Mr. Business Partner, you're not reconciling this general ledger account. The business partner could say, I don't care. I don't have time. And the mistake many new auditors make is you try to sell your point of view on a policy. Hey, don't you know there's a policy that requires you to reconcile? Well, the business partner may still say, I don't care. I don't have time. You always sell your point of view based on risk. Here's what can happen if you don't reconcile. We just had a $7 million fraud because they weren't reconciling a similar account. Oh, yeah, you need to reconcile. We aren't talking about this today, but we will in the fieldwork section here on Friday. So if you're not signed up for the webinar on Friday, much more to come on fieldwork. We'll talk about the components of an issue and recommendation in that webinar: condition, criterion, cause, effect, recommendation. We'll go through the details of your responsibilities in fieldwork. Another hour and a half, 90-minute webinar on Friday of this week. I encourage all of you to attend. We'll talk much more about fieldwork. In the reporting phase, we issue a formal audit report. This audit ratings matrix, I'll just say this much. Many audit organizations have a formal process for determining the audit rating, and it couldn't capture the COSO components. I'll show you that here in just a minute. You typically would never share a rating with the business partner unless you had a formal draft of the audit report completed. It's already been approved by your management team in the internal audit department. If the business partner were to walk up to you during fieldwork and say, do you think we're going to get a high audit rating? You should say, I don't know. We don't know that until the end of the audit process, where we have a formal process that we go through to determine the audit rating. And for most audit organizations, the report goes out within 30 days of the fieldwork end date. It's not a lengthy time. We should get the report out as soon as possible after we're done with all of our fieldwork, after we're done with all of our testing of internal controls for control effectiveness. Interim performance appraisals, that varies between audit organizations. If you worked on an audit project 2 weeks, maybe 80 hours, you'll get a formal interim performance appraisal. Some audit organizations say if you worked on it at all, or 40 hours, you'll get a formal interim performance appraisal. In one of our upcoming webinars, we'll talk about interim performance appraisals. This is what I mentioned earlier, where some audit organizations actually use the COSO components, the ones we just went through, in determining the audit rating. Many audit organizations have a numerical rating system where 5 is the best rating we can give to a business for an audit, 1 being the worst. And based on our evaluation of the control environment, risk assessment, control activities, information and communication, monitoring, we'll have the final audit rating for the audit report. Again, this is typically or something what the 5 audit ratings may look like, the definitions of a 5 all the way down to a 1. But I'll just say this much, the ratings vary between audit organizations. This is not required. I don't want anybody walking out of here today thinking you have to have a 5-tier audit report rating. But again, some do. Some audit organizations have a 3-tier scale. They use words like acceptable for the best rating, qualified for the middle, or unacceptable for the worst rating. The last phase of the audit project is follow-up. All right? Now, what is this? Well, in fieldwork, we identify issues, control weaknesses. Remember, as I said earlier, if they're significant enough, we'll give them to the business partner in writing, and the business partner must respond back to us in writing with a corrective action plan. Now we go back and follow up. We follow up to make sure that the business partner has addressed the root cause of the issue. If you were the auditor doing the original testing during fieldwork, you may be on the follow-up audit as well, where you'll go back and pick a new sample of transactions and test to make sure that the control is effective, that management has addressed the root cause, it's no longer an issue. Okay? Planning, fieldwork, reporting and wrap-up, and now follow-up, the final phase of the audit process, where we ensure that this is not an issue anymore. In some cases, we go back and do testing again. In some cases, we wait to the next audit project and we test those controls during the next audit project. It all depends on risk. It all depends on the significance of the issue. related to how we will actually follow up on the issue. Now let me just say this on this slide. If you look at the last bullet here, when typically we give an issue to a business partner during field work and they respond back to us with their corrective action plan, they have to give us a due date of when they'll have their corrective action completed. You know, it has to be within reason. They can't say, well, 5 years from now I'll have this issue fixed. No. I mean, this has significant risk, or we wouldn't have given it to you in writing. This needs to be addressed as soon as possible. And so typically we ask for a date. We actually have the business partner commit to a date when they will have the corrective action completed. And in that last bullet there, if they go, in some audit organizations, about 1 month past the date that they committed to, we roll it all the way up to the audit and exam committee. Remember I said they're our main customer. So let's say they said, you know, we're going to have our corrective action done by February 1st. But come March 1st or March 2nd, it's still not done. We'll report that formally to the audit and exam committee. And usually the pressure now coming down from the top to make sure that they understand they need to get this issue fixed and fixed as soon as possible. They need to complete their corrective action as soon as possible. Those are the 4 phases of the audit process. Remember, planning, fieldwork, reporting and wrap-up, and follow-up. Now, some audit organizations have a business monitoring program. This goes on between audits. I like to think of it as a calling program as well, where we stay in touch with our business partners. If there's been any changes in their businesses, we should know about those. Maybe we need to escalate the next audit. We thought we were going to audit you in 2 years from now, but based on the changes that we see happening in your business, we're going to audit these. We're going to audit you next year, or something like that. So this is, you know, it varies between audit organizations, but we should stay in touch with our business partners, with the clients, with our businesses, to make sure we understand changes in their businesses, any escalation of risks, possible escalation of the audit project, the next audit, the next formal audit that we will do of their business. That's the audit process, and I guess at this point in our presentation today, that kind of wraps up the 3 topics I wanted to talk about. But any questions at all related to anything we talked about? We talked about, remember, the Professional Practices Framework. You can go to the IIA website. You can always look at the Professional Practices Framework there. We talked about COSO, the other main learning point today. Don't forget about the 5 components of internal control. If the company is managing risk appropriately, they've got a strong control environment, strong risk assessment, strong control activities, good information and communication, and an effective monitoring process. And then finally, the phases of the audit process: planning, fieldwork, reporting and wrap-up, and follow-up. My contact information is here. Again, you can always reach me at bill@woodingtontraining.com. I'm currently offering 6 different seminars, face-to-face seminars. A new auditor training class, an auditor in charge training class. I'm an IIA instructor for the CIA exam review class. I also offer 3 professional development seminars, a business writing class, which I'm teaching very frequently, Writing to Achieve Results. We had a webinar on that a few weeks ago. I teach Leadership 101, which is around team building, and I teach Situational Leadership 2. I'm a Ken Blanchard instructor for Situational Leadership. Again, I'd love to talk to you about bringing training into your organization, but again, I just want to thank all of you for allowing me to present these topics to you today. And Jim, with that, I'll turn it over to you.
Well, thank you, Bill. Thanks for giving everybody an introduction and a refresher on internal auditing basics. I know that you know, it's good to do these things from time to time. Continued learning is really the foundation of keeping yourself up to date in the profession. So I'd like to thank everybody for joining us today. And if you do have any questions, please feel free to ask them. Reminder, if you attended today's webinar, paid, and answered all the polling questions, you will receive your certificate within 10 business days. You will also send out the link to the recording as well as the handout for the slides, as well as the new auditor orientation manual that we offered before. If you attended today's webinar and did not pay, but would like CPE and you met the NASBA standards by answering all of the polling questions, you can pay the registration fee by sending an email to webinars@auditnet.org. Upon receipt of payment, we'll make arrangements to send the CPE certificate, handouts, and links to the recording. If your organization had a number of individuals attending today, then you can pay the group fee of $300, and that would cover everybody within the group that did answer the polling questions, and we would send out certificates to all. So again, thank you for joining us today, and I'd just like to remind everyone the purpose of our Training Without Travel webinars is to provide you with high-quality, low-cost online alternative training solutions covering timely topics with value-added resources and tools that you can use in your job. We bring the world's best subject matter experts directly to your desktop with timely information. The next webinar on the internal audit skills training will cover fieldwork. For information on the remaining webinars in this series and other Training Without Travel opportunities, please visit www.auditnet.org. And with that, thank you, Bill, for putting this webinar on today, and thank you all for joining us.
Thanks, everybody.
Have a good day. Bye now.